Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another Money Monday. Today we're going to talk about what the heck is going on with Bitcoin. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. And a huge special thank you goes out to everybody. Guys, I've gotten so many emails, messages, WhatsApps, you name it, texts, calls for those of you that have my number, friends that I've had for years and years. Thank you, everybody, for all the healing vibes. I am now, 3 days out of my total hip on my right-hand side. I had a right total hip replacement done on Friday morning. It was a treat, not a trick. Haha, very funny, right? Because it was Halloween on Friday. And I'm actually feeling well enough to sit here at the computer for a quick 30 minutes today and make a short video for you on what the heck I think's going on. So just wanted to say a huge thank you to everybody who reached out. I accepted all the thoughts and prayers, and they've been answered. So thank you guys so much. I really, really, really appreciate it. Money. So the inspiration for today's lesson, or today's video, comes from Jordy Visser. This guy is brilliant, right? He is 40 years, I think, in the TradFi arena. Very, very smart when it comes to the traditional finance markets. Talks a lot about, not just Bitcoin and gold, but a lot about AI. Talks a lot about for instance, how the bond markets are broken and the money supply and liquidity. And he's on Anthony Pompliano's show all the time, right? So I started following Jordy probably about 6 months ago. I subscribed to his newsletter and started listening to that reading that on a regular basis. And this one that he put out most recently was amazing. So he put it out at the beginning of the month. It was talking about Bitcoin's silent period right now. And I would highly, highly, highly advise going and A, following Jordy on X, B, following Jordy on YouTube, and C, subscribing to his newsletter. The crazy thing is his Substack is free right now. I think eventually he's going to start charging for it. He really should, because a lot of the other quote-unquote experts charge anywhere from $50 to $250 a year for their Substacks, and I don't see why Jordy wouldn't also. The second inspiration comes from Checkmatey, from good old James Check on Chain. And James talks about that it's a great read. He talks about that exact newsletter that I just showed you from Jordy Visser and said it aligns with the great rotation idea that he's covered over recent months. The sell side pressure exerted by existing Bitcoin holders is tremendous. The average spent coin age this cycle is 100 days, up from 30 days typical. The buyers are patient, sophisticated, and very large. So what does that all unpack to in English? Average coin age this cycle is 100 days, up from 30. So 3 times longer that people are holding these. A lot of times what you see in a bull market is short-term holder selling, right? Short-term holders, anybody less than 155 days. Now I know 100 is still less than 155 days, but that says that's the average. That means there's some that are spending coins that are over 155 days old, and some that are under 155 days old to come up with an average of 100. When it's 30, it's pretty much all short-term holder selling. So it's just this rotation of new capital versus old capital coming back to life again. And that's what he means. Existing Bitcoin holders is tremendous. That sell-side pressure, that is explaining a lot of the price action that we're seeing. And I'm going to go into that in a lot more details. And then finally, he says the buyers are patient, sophisticated, and very large. This is not a retail game anymore. Any of us that think it is are going to be very sadly mistaken, right? It was a retail game all the way up through the last cycle. As soon as the ETFs arrived and Bitcoin treasury companies started holding thousands, tens of thousands, and hundreds of thousands of Bitcoin on their balance sheet, it no longer was a retail game anymore. There's no way that the retail buyers, the existing buyers, can keep up with that kind of buying pressure at the end of the day. So let's unpack this thing. We'll get into a lot more detail here and you'll see what I'm talking about. So this time is different. Why? Because Bitcoin is a $2.2 trillion asset right now. The asset's no longer a $100 billion asset or a $100 million asset like it was back in the late 2000s, early 2010s, right? It's a $2.2 trillion asset. It takes more money to move this sucker than it used to. Institutions are here. ETFs are here. And Bitcoin treasury companies are here, right? These guys don't play with, oh, I'm going to do a $25 DCA or a $100 DCA, dollar cost averaging, a $50, $100, $200 buy each day or each week. These guys are buying 500, 1,000, 2,000, 10,000 Bitcoin at a time, at a clip. And they're doing it week after week after week after week. So you've got to remember, this time is different than the times of the past. Also, what about the OGs? And again, a lot of this is coming from Jordy's paper, all right? I'm going to give credit where credit's due. But OG is the old guard. They've been in Bitcoin since $1,000 or less. They have hundreds, thousands, or tens of thousands of Bitcoin. And you're like, God, that's crazy. Well, what if they bought their Bitcoin for $100? If they bought 1,000 of them, that's $100,000. They spent $100,000 and they own 1,000 Bitcoin. At some point, they're probably going to want to take a profit. They're like the VCs, right? As Jordy Visser describes them, think of them like venture capitalists or those that financed the IPO, initial public offering of Bitcoin. No, it's not a company. No, it didn't have an IPO. But he drew a parallel to this of how that looks in the real world markets that we're going to go into here in just a bit. But it made a lot of sense when he described it this way. These are people that have been in forever. They've been waiting for Bitcoin to institutionalize. They knew that once the institutions were here, they'd have a 10x, a 100x, maybe even a 1,000x on their initial investment. And that's what venture capitalists do. They don't just put their money in and leave it in forever. A venture capitalist puts their money in to get a project up off the ground and then to cash out at some point so they can go support a new project. These guys, these venture capitalists or OGs as we're calling them, right? The old guard, the OGs, they've held through thick and thin things like Mt. Gox, the China mining ban, multiple bear markets, even the FTX and Celsius debacles. There's a whole lot more that I didn't even put on here. Every time, quote, Bitcoin was dead, these guys held. Every time there was a new piece of legislation that made it more difficult to own Bitcoin, these guys held. Every time there was a new piece of legislation that made it more difficult to purchase Bitcoin, these guys held. They're being rewarded for being first, for being the innovators, for being the ones that put the money in at the very beginning to support a project when nobody else under the face of the sun thought it was going to work. So here's some comparisons, like I said, we would go into. You got Amazon. They IPO'd in 1997 at $18, right? Within 3 years, it hit $100, and then it traded sideways for 2 years as early investors and employees who had acquired it at $1 to $20. You're like, how'd they get in at $1 if it IPO'd at $18? They were employees. And or they might have been they may have been involved in the initial IPO itself. They may have been able to get their shares for $1 and then it IPO'd immediately at $18 and they already have an 18x on their investment. But they waited until there was enough liquidity in the markets for them to be able to sell their shares out to everybody else on the open market. So those insiders, those VCs sold their shares at $100, taking anywhere from 5x profits if they bought in at $20 to 100x profits if they bought in at $1 a share, right? They took their profits. That's why they invested in Amazon early in the first place. They supported it before everybody knew what it was. Once everybody knew what it was, they casually strolled to the exits and counted their Benjamins in the process, right? Google, same thing in 2004, Meta in 2012. Both of them traded sideways for a couple years as early investors and VCs and employees took profits, right? They IPO'd, spiked up, and then just went sideways, even sideways to down. That was as the distribution occurred from the early OGs or venture capitalists or early IPO investors went out to those that were coming on board later in the process. So what's liquidity got to do with it? Yes, I'm still on pain meds. Kind of funny. Liquidity's everything, guys. Imagine someone trying to sell $100 million worth of Bitcoin back in 2015. Not going to happen. NGH, not going to happen. Or $1 billion worth of Bitcoin in 2019. NGH, not going to happen. It would have tanked the market. The market can't absorb that kind of sell side pressure. There wasn't the liquidity for it. There simply weren't enough buyers to absorb that kind of selling pressure, right? The market wasn't mature enough. There weren't institutions, there weren't ETFs, there weren't all these companies putting Bitcoin on their balance sheet. There was a bunch of crazy guys and gals that had been in from 2009, 10, 11, 12, 13, 14, 15, trying to sell to even crazier people in 15 through 19 and 20 and even into 2021 when there were all these bans going on and Mt. Goxes and all these issues with Bitcoin, right? So the ETFs, the companies holding Bitcoin on their balance sheet, the sovereigns, sovereign wealth funds, those are what's now providing that kind of constant bid. They're providing the liquidity. They're providing the buying pressure so that it can absorb this kind of selling pressure. How crazy is it that we're selling this kind of Bitcoin every single day and the price hasn't dropped below $100,000? That should tell you something. It's shifting from people that got in at the beginning 5, 10, 15 years ago over to people who are now going to hold it for the next 10, 20, 30, 40, 50 years. These aren't people that are going to trade it in the next 5 to 10 months. It's just not happening. There's a handful of those, but not these ETFs, companies with Bitcoin on their balance sheet and sovereigns. They're holding it for the long haul, guys. So you mean it's not manipulation? And I had to throw the laugh out loud in there because you hear this over and over again. The markets are manipulated, manipulation. If anything goes wrong, if it doesn't just constantly go up and to the right, then it's got to be manipulation. I've been at this for a long time. I've been at it for over 40 years. Over 40 years, I've invested in the markets in some way, shape, or form. This comes up over and over and over again. So you mean it's not manipulation? Nope. Despite what so many are trying to convince you, I don't believe that it is. There's some manipulation going on with things like Solana, for sure. When Binance turns around and sends a ton of Solana via Wintermute to go sell on the open market and Binance doesn't even have any on their balance sheet, okay, that's suspect. All the altcoins, every single one of them are manipulated. To think that they have any kind of fundamentals backing them is just absurd in my mind. When I say the alts, anything out of the big ones, Bitcoin, Solana, and Ethereum, let's say. All the rest, they're all manipulated. Oh, but Binance coin is up to $1,200 a coin. It's the most heavily manipulated of them all, guys. They all are. So what is it then with Bitcoin? If it's not manipulation, what is it with Bitcoin? It's good old-fashioned sellers. That's it. People selling, taking profit, OGs, long-term holders that are happy with their VC-like returns. They're loving their 100x, 200, 500, or even 1,000x returns. And they're either rotating that into other investments, like over into the AI world, right? A lot of these people that supported brand new cutting edge technology back in late 2009, 2010, 11, and 12 with Bitcoin, they're now seeing the same cutting edge technology with AI. So why not take 1,000% returns and rotate that over into AI companies in hopes that they'll get another 1,000% return? Will they? Who knows? We don't know. They also may just be cashing in lifestyle chips. They've held through everybody laughing at them for over a decade. Most of these people have held for over a decade, some for as many as 15, 16 years. And they're probably just sick and tired of all these people saying, laughing at them, saying it's going to zero, China mining bans, Mt. Goxes, the FTXs, the Celsius. I don't know about you, but at some point, enough is enough. If you turned around and invested $100,000 and it's worth $10 million right now, that's probably enough to be able to live the rest of your life very comfortably and never want for anything for the rest of your life. Think about that one for a second, guys. Think about why you're investing in the first place. And it's not a bear market? Nope. Once again, if there were no buyers, we'd be in a bear market. The price would tank. We'd be down there at 75,000, 80,000. We might even drop to 60 or 65,000 or hell, 40 or 50. But you got to remember, excuse me, it was around $45,000, $50,000 when the ETFs came in. And we skyrocketed afterwards. We're not going below that. It's just, I don't see it happening. You can never say never. You can never say with 100% certainty. Nothing in life is 100% certain. But there's a constant bid for this Bitcoin that's being sold. So as fast as the sellers are selling it, the buyers are buying it. The sellers are just selling it slightly faster than the buyers are buying it. That's why we get up to 115, 120 and drop back down to 105 to 110. And we get up to 112, 114 and drop back down to 107, 108. It keeps pulling back just a little bit because the sellers are overwhelming the buyers right now. But the buyers, they haven't packed it in and gone home. They haven't packed up their stuff and left the sandbox yet. They're still in the sandbox and they're still ready to play. And that's why there's a constant bid and we're holding $100,000 like champs, as I said, without the price cratering. So what's really happening? Okay, at the end of the day, what's really happening? Think of it as a changing of the guard. And again, thanks to Jordy for this one. It's a changing of the guard. Bitcoin is moving from these cypherpunks and early adopters into diamond-handed institutions. Institutions like ETFs, corporates with the Bitcoin on their balance sheet, sovereign wealth funds. It's moving from a heavy concentration into distribution mode. So yes, it's concentrated at ETFs and Bitcoin treasury companies, but how many individual shareholders are there in each ETF and in each Bitcoin treasury company, right? MicroStrategy has millions of shareholders. So their 640,000 Bitcoin, give or take a few hundred or a few thousand, it's around 640,000 Bitcoin, is widely distributed across all the different Bitcoin shareholders, or the MicroStrategy shareholders that are out there. The ETFs, right? BlackRock holding, I don't even know what they're up to, 700,000 or 800,000 Bitcoin. That's 700,000, 750,000 Bitcoin is spread out across all the holders of that ETF. So while it's concentrated at the ETF, it's widely distributed because of how many shareholders there are in each ETF and each Bitcoin treasury company. So we went from thousands that were holding massive positions, right? Thousands of people that were holding hundreds, thousands, tens of thousands of Bitcoin to millions of investors holding much smaller positions. So that wealth distribution has happened and is happening as we speak. It's moving from the OGs, from a heavy concentration in these cypherpunks and early adopters, into more diamond-handed institutions at ETFs, Bitcoin treasury companies, sovereign wealth funds, and retail buyers like myself that lock it away on a hardware wallet, honestly, never to see the light of day again, except maybe later on in life when I can borrow against it without a lot of stress borrowing against it. So what lies ahead? I think there's more chop-solidation, again, to quote James Check. He loves that term, chop-solidation or consolidation, as this OG to new holders distribution continues. So as that distribution goes from the long-term holders, the long-term OG holders, and moves over into these new short-term holders, as that distribution continues, I think there's more chop-solidation. It's going to wear people out. It's going to wear people out that are sitting here expecting 100x returns, 50x returns. Those days are gone. It's just not going to happen like that anymore. It's just not. So if you're in it for those kind of huge returns, it's likely not going to happen. right? There's going to be less volatility, basically, is what I'm saying. Gone are the days of 10 to 15x blow off tops and 80 to 90% drawdowns. I just don't see that happening. Bitcoin is maturing. It's a $2.2 trillion asset right now instead of a $220 million asset like it was 10 years ago. It takes a lot more capital, a lot more liquidity to move this freaking thing. So could we see 2 to 3x tops and 30 to 50% drawdowns? Yeah, I think that's the new norm. I'm not saying there'll never be drawdowns, but it'll be much more tradable like traditional markets are. Not this brand new, sharp, straight, vertical line like you see in the early phase of an S-curve adoption. I think we've shot through that S-curve adoption and we slowly continue going up and to the right at this point. I think we've gone through the vast majority of that vertical phase of the S-curve adoption, if you're familiar with those. I think it's going to be more correlated with traditional risk assets. That will return. Jordy says that. I've heard a few others say that. I firmly believe that. It's going to get more correlated with traditional risk on assets, right? It'll continue as the debasement trade, right? It'll correlate with gold a little bit more, I think, in the future as well. As people move from a weaker currency, fiat, it doesn't matter whether that's euros, whether that's yuan, whether that's yen, whether that's pounds, or whether that's US dollars. It's all crap. And I made a whole video about it on the whole debasement trade. It'll continue making its way into stronger hands over here at Bitcoin. And finally, Bitcoin matures. And yes, there's light at the end of the tunnel. Sentiment will improve once the distribution is complete. This part is painful. You're going, golly, these people are buying thousands or tens of thousands of Bitcoin per week. These ETFs, Bitcoin treasury companies, and sovereign wealth funds, not to mention all the retail investors doing their part, buying some here and there, and the price is going nowhere. Well, right now, as Bob Barker would say back in the day, the price is right. This is the time, I believe, that we can acquire some Bitcoin before it starts just continuing to grind up into the right with smaller tops, shorter pullbacks, less volatility, but just a general up and to the right, kind of like the S&P 500 does, kind of like all the other traditional risk-on markets do. Guys, I hope you found mad value in this today. If you did, smash that like button. Make sure you comment below. Tell me, what did you like best? What did you learn today? And what would you like to see more of? Also, make sure you subscribe to the channel. You don't want to miss any of the videos that I'm putting out. Share it out with your friends and family so that they can increase their financial literacy as well. And you can book a course with me or join the community. The community is launching. We're already launching it to a few of the insiders right now, and they're getting to test drive it this week. That's available over at gdinerocoaching.com. You can see just some of the testimonials from people that have taken either a one-on-one with me or they've done a understanding options course where I teach them everything from soup to nut on options, or TradingView and technical analysis where I teach them how to master the charts like a TradingView ninja. Right now, I don't have any one-on-one appointments available, not through the end of the year, not for new clients. I just don't have the capacity anymore, guys. But those courses are available and the community is coming fast and furious. And finally, thanks for tuning in, guys. I'm G Dinero, and I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in, and we'll see you next time. Take care.